Welcome to the May 11th, 2012 version of Market Plus here at our Market to Market website, exclusively here at our Market to Market website. Mark Pearson, and with us this week, Jamie Kowalski. Jamie, we didn't get a chance to get to cotton in the show, and I do want to talk about that because $9 sell-off in cotton, and there's people who are saying we've just begun to sell off in cotton. What's your take on that?
Longer term, I am bearish the cotton complex, but we've been on such a steep sell-off, the market is trending oversold in here where we're at right now. The market was anticipating a bearish report on Thursday. They got one, pushed it limit down, then followed through on Friday. I think you wait for a correction to sell into. I'd be selling December all day long at 87 is where I'd be. I'd get a correction up in there, but I think right now I'd stay away from adding new shorts on without some type of technical bounce.
All right. Well, let's shift over to the corn market because that's such a driver of all of our markets. And frankly, the news from USDA, and you always get the finger wagging, is this number correct? And USDA's had so many different corrections to their reports and restatements and so forth. So, and again, they're guessing, they're surveying, they're assuming we're going to see perfect yields for 2012 and 13 for this incoming crop. And we have gotten off to a good start for the most part. But that doesn't mean weather challenges aren't ahead. But it seems like people get so bearish at this moment in time when we are planting a lot of corn acres. We're planting a lot of soybean acres. We have a lot of wheat in the ground that looks pretty good. Prospects for double crop, if moisture's there, certainly are promising. So it's kind of a bearish time of the year in terms of USDA outlook. But there are some positives out there. And I think one of the most interesting things is the whole China card and what they could do to corn. As you mentioned, corn in China is over $9 a bushel. We still look like a bargain.
Yeah, and they were in for big purchases again this week, roughly 300,000 metric tons again. I think they keep coming to us all summer long, but is it going to be enough to get the carryout below 500 or 400, or do they ship the new crop and try to wait it out too? But yeah, this is getting to be a stressful time for a lot of producers. $5 basis, $5 cash corn got wiped off the board this week. Guys are trying to finish up planning and wondering, do we sell here? Do we wait? I agree with what you said in the show. There's plenty of time. We don't have an ounce of weather premium in the market right now.
No, not a drip.
Not a drip of it. We are trending drier down south. I like 530, 540 yet, just as a retracement without weather, maybe 560, 580 with some weather. I think we're just in a broad 30, 40 cent range right now until we can get more weather down the road.
Right, and I think you're right. I think that range will be, the breakout will be determined just what kind of things Mother Nature throws at us this year. The acreage, the June acreage number, the final acreage number, that can also be a factor here too. How much of a bean acreage shift do you think we'll see?
I think somewhere between 2 and 3 is
so not huge.
Right, not huge right now. I think the bigger shift there in the bean that's coming to beans is off this double crop wheat. That's yet to be seen. But I think the acreage numbers are factoring right now. 75, 75 and a half on the beans, 95 and a half, 96 on the corn. So we're going to have a big surprise there. The bigger number that's going to be traded is still the carryout. It'll read down below 150 in beans by the end of June, and can corn catch up and get below 500 or 600.
Okay, big money. Are we seeing big open positions being created now? You mentioned soybeans, still a big long position going there.
Right, huge length by the funds, up over 200,000 contracts. They've narrowed the corn positions down, down below 50,000. They're closer to 20 at times, 20,000 this week. But I think they're going to hold the beans longer term. The carryout's way too tight. China's looking to buy there as well, very, very aggressively every week. I'm more concerned with the funds that they just maybe go flat corn until weather shows up, and then they hop back in there like going out of style.
We saw them jump out of the cattle market and saw what that can do, and that can be fairly dramatic. So where they move and where they go is going to be interesting.
And there's not anything other market right now that's really in a bullish runaway market. Stocks ain't doing much. I think we topped out there for a few weeks now at 1,400 in the S&P. So I think they'll hang with the grains, just maybe be a little quieter on their footsteps coming back in.
And the big funds, the big index funds, they have to go long.
Yeah, they stay long.
So energy has no excitement for them right now.
Right, they just roll contract to contract, stay long.
All right, and let's talk about crude oil. You talked about on the show that there's plenty of oil out there. There's plenty of gasoline out there. There's plenty of refined product out there as well. So if through the summer you're not expecting anything barring a national security issue
national
in
security,
the Persian Gulf.
geopolitical type deal, I think the highs are in. And I'm assuming the dollar hangs around that 79 to 82 cent mark, and that'll keep a cap on the crude market. But it's just one of these deals we're caught in right now with global weakness financially, demand slowed down. We saw what happened when crude went to 110 here domestically. The demand slowed down, and we built our supplies back up very, very quick. And I think you're trending probably between about 92 bottom side up to 99, maybe 101, running some stops here until 4th of July.
All right, well, it's going to be interesting to see. It just seems like we always have this link. When we see crude oil prices start to deteriorate, the whole commodity sector seems to come under some pressure. And real quick, because you only had 5 seconds on the show, the gold bugs out there watching. What are your thoughts, and what do you think we'll see for them?
I still like buying a sharp break there. Like I said on the show, August at 1550 is where I would look at. I don't think it's going back, 2000 or to 2000 and run over that, but just a nice correction off of that. The news in the gold market this week is more linked to Greece again, which is not a surprise. Are European Union central banks, is the IMF going to release gold, sell gold, to start relieving part of Greece's debt? I think it's a definite no. It ain't going to happen, but that was kind of the news this week on part of the $60 sell-off.
I want to thank all our folks who took time to send us a tweet, and Dean in Central Iowa sends a note about the wheat harvest. Hopefully we answered his questions in the show. And double crop wheat acres, any idea what that acreage is going to look like?
I don't think so. I've seen rumors, or not rumors, speculation of 1 to 3 million is what they're expecting. I think more than trying to outguess acres right now is going to be moisture. A lot of this is on marginal ground, dry ground, south and west, and I think moisture is going to be the bigger key. Then same, we got 5 million acres, double crop. Let's see moisture.
Doug in Washington asked about your outlook for corn, new crop prices, but we didn't talk about hard red wheat prices. What are your thoughts there? What's your target there?
I like 685 for the Christmas contract. That's
okay.
KC. And I like 6.5 for the July contract.
All right. I want to thank Phil, and I want to thank Gerard, and everybody for dropping us a note. Keep doing it. We want to get those questions on the show. We appreciate the input. And let's a big thanks to Jamie Kawaki for being with us this week. And for all of us on Market to Market, I'm Mark Pearson. Thanks for joining us, and have a great week.